Hello, everybody. I'm Phil Brandt, President and CEO of AIM Employers Association, and welcome to This Week at Work.
Welcome to This Week at Work, the only show to pack workplace news, practical HR solutions, and timely insights into every 30-minute episode. It's Thursday, November 14th, episode 304. Today, are you ready for the federal payroll changes coming down the pipeline? We welcome back Amanda Dussold, payroll tax and fringe benefits expert, to break down key updates from the Secure 2.0 Act, the Tax Cuts and Jobs Act, and what you need to know to prepare for 2026. And here's a hint, it might be time to embrace AI. This show is brought to you by AIM Employers Association, live every Thursday morning, so you can regularly connect with their experts and get your legal questions addressed by Ogletree Deacons. And now, it's time for This Week at Work.
Good morning, Bert. How are you this morning?
Good morning, Phil. I'm doing well. How about yourself?
I'm great. Happy to be here. A lot of things going on. I do want to just reflect back on last week's conversation on the gravy, no gravy, and you threw out that big depends that you like to throw out. You know, it's just we'd had several episodes without a depends, and there you are with it's depends. So
Yeah,
what does it depend on, gravy or no gravy for you?
It does kind of depend. I mean, it's even beyond gravy or no gravy. I mean, I think that has to do with how well the turkey's prepared, whether it's moist or not. But I mean, then you have the choices of white or brown or mashed potatoes on or just the entire plate. You know, I don't know.
Yeah. Well, I guess in that case, it does depend. I'll tell you what, I'm all about the gravy, just smothered on everything. I don't know. My brother always cooks the turkey. It's always dry. He thinks it's great. It's a little bit like National Lampoon's Vacation, where you're trying to cut the turkey. It just doesn't work very well. So we're lots of gravy in our family. But Bert, you remember Amanda Dussold, our payroll and fringe tax benefit expert. Say good morning to Amanda.
Good morning, Amanda. Nice to see you back on the show.
Good morning, Bert. Good morning, Phil. Thanks for having me.
Good morning. Happy to have Amanda with us. She's our guest today, and we're going to talk a little bit about all the payroll tax and fringe benefits changes that are coming up in the program that she's facilitating on AIM's behalf here in a few weeks, early December. And there are lots of changes, so stay tuned and we'll talk a little bit about those. Let me go ahead and introduce our poll question for the day. First question here we have is, which tool do you think would be most helpful for payroll teams in preparing for future changes? And we have several options there: automated payroll tax software, AI-driven data entry and forecasting tools, policy written templates, payroll training programs, payroll consulting services. All kinds of options. I like the AI data-driven entry and forecasting tools. That's the one I'm voting for, but maybe you'll have an opinion on that, Amanda. I don't know. Bert, are you ready to kick it off on Lawyer on the Clock for us?
I am. There's so much to talk about today, Phil.
I tell you what, you are going to be busy for the next 4 months with things to talk about. All right, Nick, let's pull that lever.
All right, it's time to look into what's trending in employment law. Lawyer, you're on the clock.
I want to talk about today. We've been hearing quite a bit in the news about Trump's cabinet that he's starting to build out. And of course, I'm not going to wade into most of those appointments. I'm rather going to focus on names that are being floated out there that will impact the labor and employment.
But I do, Bert, I'm sorry, I got to stop you already because I love the appointment of Elon Musk. I know you know, and those closest to me, I geek out on Elon Musk. I align with his thinking a lot of the times, and I think it's going to be really interesting to see what he can get into and uncover. So
yeah,
put everything aside, all the other appointments, that one I'm in favor of. Be curious to see how it goes. How does, one of the richest guys in the world, has got no chance of ever being president because he wasn't born in the United States. He doesn't really have the emotions tied into things that we do because of his position on the spectrum of autism and so forth. And he can just dig in and go about logical decision making. And I'm all in favor of that.
Yeah,
We need some of that.
I agree with you on a lot of what you said there, Phil.
Yeah.
Interesting. It's not only Elon Musk, but it's Vivek Ramaswamy.
That's right. No, I think it's a great team.
I agree. A great team to. I guess is it Dog or Doge? Doge.
It's Doge.
Doge. All right.
Doge.
Thank you. I hadn't heard it pronounced yet. So Doge.
Yeah.
Department of Governmental. What is it? Department of Governmental Expenses or something.
I thought it was excess.
Excess.
They're trying to cut out the excess. So
There you go. That hopefully bodes well for the economy. So, all right. Well, enough of that, Phil. I want to talk about labor and employment. And the first thing that I want to talk about today is the name that's being floated out there to be the Secretary of the Department of Labor. And the name that's kind of come to the forefront right now is Andrew Puzder. He was the former CKE Restaurant Holdings, Inc. CEO. That was the parent company of restaurant chains Hardee's and Carl's Jr. He was nominated by Trump back in 2017, and he dropped out of the running in 2017. And ultimately, Trump appointed Alexander Acosta in his place. There's a little baggage that Puzder may bring with him. But right now, his name has emerged as as sort of the early front runner to lead the Department of Labor. And again, just the fact that he comes out of the fast food industry, which really has been under assault the last not just 4 years, but even going back to administrations before that through minimum wage.
It's really been the last 10, 15 years, quite a bit, hasn't it?
It has. And, that's where we're starting to see so much of the automation in restaurants with fast food restaurants with kiosks and ordering on apps and those types of things. All of those things take away positions or can fill in for actual bodies in the restaurants. And so interesting choice that's being floated around out there on that. The second thing I want to chat about is just the impact of Trump's second term on the NLRB. Of course, everyone who's been listening to the show or anyone who's heard me talk anywhere recently has heard me talk about Jennifer Abruzzo, who is the general counsel of the National Labor Relations Board. And she is really the one who's been leading the policy at the NLRB the last 4 years, when the NLRB has been going after things that they've never, ever been interested in before, such as non-compete agreements and non-solicitation and confidentiality agreements. Basically the turning the union election process on its head and requiring employers to file a petition for representation when the union when the union demands recognition. It's up to the employer now to file a petition. Jennifer Abruzzo has been leading those efforts to make those things happen at the board. And everybody who's heard me talk has heard me talk about the fact that on day one of his administration, Biden asked Trump's head of the NLRB, not head of the NLRB, Trump's NLRB general counsel, Peter Robb, to resign. And when Robb didn't resign, Biden fired him the next day. It was a very controversial move. It had never happened before in the history of the NLRB. And so he terminated him. And just back in August, so just a couple months ago, the Sixth Circuit Court of Appeals held that President Biden did not violate the law by firing Peter Robb. And so I can pretty much promise you that on day one of his administration, I think that Trump is going to be firing Jennifer Abruzzo, which is going to really change the trajectory of the NLRB.
Yeah, and it's going to be an interesting change in trajectory for sure.
Yeah, and I think the board's really going to be backing off of a lot of the things that it's been focused on the last several years. Now,
So does that mean between now and then you expect to see some changes?
So there you go, Phil. That's a perfect segue into a decision that the NLRB issued yesterday, which in essence bans a precedent that has been in place since 1948. And this new ban takes it takes place immediately. And basically, it says that captive audience meetings, those are meetings where companies basically take all of the employees who are eligible to vote in an election, and while they're on working time and being paid by the employees are required to attend a meeting that the employer holds, where the employer gets to advocate for its position on the unionization issue. Those have been deemed captive audience meetings. And again, the employees are on the employer's dime at that point. If the employer chooses to have them perform work or to attend one of these meetings, since 1948, that has been a lawful exercise of employers' rights. Well, yesterday, the board issued a decision banning captive audience meetings, saying that employees may not be made to attend those, even though the employer is paying them for that time. The employer cannot force the employees to attend those meetings. And so, yes, to answer your question, Phil, I think we're going to see some more decisions like that coming out of the NLRB before Ms. Abruzzo's term comes to an end, probably on January 20 next year.
All right, so let me just ask a clarifying question, because that's a major change. It's a major change in how union campaigns would be facilitated on behalf of an organization. Captive employee meetings are a standard part of any union campaign I've ever been a part of.
Yes.
If you are in a union campaign today, and there are plenty of organizations that are in the middle of a union campaign, and I have captive employee meetings scheduled for next week, am I able to hold those meetings?
So I think certainly under
this would be a good time to say it depends, maybe.
No, I'm gonna be more certain than that. And under this new precedent by the board, if you hold those meetings and force the employees to attend, you are definitely going to get an unfair labor practice charge that the board will investigate. Now, it comes down to a risk tolerance there, because knowing that you're going to get an unfair labor practice charge on it, the administration will be changing soon. So will the board actually pursue the charge? Who knows?
Right.
I tend to doubt it eventually. And I also don't think that the NLRB's decision, in light of what we've talked about for the last many months here, the decision of the Supreme Court getting rid of Chevron deference, I don't think that this decision by the NLRB would stand up in court in any event. But, again, it's risk tolerance, and do you want to be the test case for the NLRB? That's what it really comes down to. And absolutely. I think that's a really, really good time, Phil. I did send Nick, if you could put that picture up that I sent you. So this is the National Labor Relations Board as it exists right now. And you can see that right now there are three Democrat appointed board members, one Republican seat that has been remained unfilled for a period of time, and one Republican appointee sitting on at the NLRB. And the three Democrats, they may serve 1.5 years into a potential Trump presidency. And so this is no different than when Biden got into office. He had Trump's board sitting there for a period of time. Again, remember, he did fire Peter Robb, but the board members itself remained a Republican board for a period of time. Now, interestingly, you have right in the middle there of the Democrat members, Lauren McFerrin. Her term does expire December 16, 2024. And with the Democrats holding the Senate right now, I do believe there's a chance that she gets reconfirmed for another full term before Trump assumes the presidency next January. So it's really going to be interesting to see what shakes out with the board on all of this. Very active, a lot of fun stuff for people like me to pay attention to.
Well, we will let you pay attention to it, and then we'll climb on your back and take the ride of information here on This Week at Work. So
perfect.
Yeah, I heard the line the other day, and maybe I'm just not with it enough, and someone said to me, "Are you picking up what I'm throwing down?" And I'm like, "What? That's a great line. I've not heard that before." So maybe our listeners are picking up what you're throwing down, Bert.
Yep. Perhaps, perhaps.
All right, very good. Anything else there for us today?
I'm just going to mention it, just take 30 seconds to mention it, that a Michigan federal jury last Friday awarded $12.69 million to a former Blue Cross Blue Shield of Michigan employee who sued, saying she was fired after Blue Cross Blue Shield failed to accommodate her religious beliefs, which she had claimed prevented her from getting the COVID-19 vaccine. So
Okay.
huge.
We talked a lot
huge
about
risk.
that over the years, particularly when that was, very topical at the time.
Yep.
So maybe we can keep an eye on that and see what happens.
Well, $12.7 million. Big mistake.
Yeah, that's a costly mistake. We did say along the way, you don't want to be the test case for that one.
Yep.
Yeah.
Tough stuff.
All right. Okay, Bert. Well, thank you very much for that. Amanda, good morning. Welcome back to the program. It's a second time around for you. I guess you've been doing our payroll tax program for us now 3 or 4 years. And every year that you've done it, we've had better and better results, comments from those who are participating, higher and higher attendance. So that tells me what you're talking about is definitely resonating with our audience. So we're happy to have you doing this again for us. I'm trying to see, it's the 38th annual payroll tax update. So we're approaching that big year of 40 there. Amanda's joining us from Southern Illinois University in Edwardsville this morning. Her students are already hovering around her door, waiting to get the time
Hopefully
because
not
she's
yet.
preparing their test and they want to know what's going to be on the test. But Amanda, talk to us a little bit about what we would expect to learn this year in the payroll tax update. Let's kick it off with maybe Secure 2.0 Act.
Yes. So last year we talked about the Secure 2.0 Act was coming down the pipeline. It stands for setting every community up for retirement enhancement. So it's this push to make sure that all employers are offering some sort of retirement plan for employees. The big changes that are effective 2025 after December 31st, 2024 are going to be the automatic enrollment of your employees. So depending on if you had your plan start after 2022, your employees are going to be automatically enrolled. They have to choose to opt out as opposed to choosing to opt in.
Right.
There's also part-time employees are eligible. If they worked over 500 hours for the past 2 years, then they will be allowed to be eligible for your retirement plan.
Now, is that only for new plans as well? Do you know, or is
that is
for
for
existing plans?
My notes, I believe. Yeah, that's for already existing plans. It says effective for tax years beginning after December 31st, 2024. Part-time employees who worked at least 500 hours for the previous two years.
Yeah, that's a big change right there, right? Because most of us have not allowed that in the past, so that'll be interesting.
Right. Yeah. Right. And again, a lot of the Secure 2.0, your plan administrator or your financial institution that houses your plans, they've been working on this because some of that is on their side.
Right.
For example, the Roth contributions. So contributing your contributions to a Roth account, that is all on the plan side. I mean, they should be making sure that the plan is set up in that way. And then the big thing that's going to be effective that we're really going to take note for 2025 is, so we have our employee deferral limits that go up, and then you have your catch-up contributions if you're over 50. Now there's a new threshold.
Hold on. Bert, are you paying attention? She went into
I'm listening, Phil.
The older age category employees here. Okay, I just want to make sure Bert's paying attention.
I didn't know it was a big birthday year for you. Yes,
right.
You're over 50. So the next step now is there's an additional, a higher level of catch-up contributions for those aged 60 to 63. Okay. So that's a new threshold, a new limit to pay attention to, and that will be effective January 1 of 2025. So just making sure that's a big thing going on, the retirement plan, the Secure 2.0.
Yeah, and these aren't things that we often think about for those of us who don't do payroll and the taxes associated with it and how the forms have to change and the different protocols and just small changes like catch up for people over 60 and the impact that has in a business. So that's, I think, the key reason why I encourage people to send their individual who's responsible for payroll or oversight of payroll to the program, because these are the things that we're not thinking about every day. We probably get lots of information about it throughout the year that it's coming, be prepared. But this gives you a chance to ask questions, learn from your peers, and really hear from Amanda, who does this every day, what might be the best ways to go about it. Amanda, what about the TCJA, the Tax Cuts and Job Act? What's going on with that?
Okay, so the Tax Cuts and Job Act was the Trump, I heard today we call it Trump 2.0 and Trump 1.0. So Trump
Yeah.
1.0, this was his plan that he implemented. It was a huge overhaul to the tax code or the tax return prep, everything since Reagan. And so not all, but a lot, can't stress that enough, a lot of the provisions that were set forth in the TCJA Act sunset in December of 2025. So this is a big thing for my world, for tax world, is okay, not only who's getting into the White House, but more or less the makeup of Congress. So what provisions are going to be extended, what's going to go away. I don't foresee, we were talking earlier. So one of the big changes is, for example, we used to do exemptions, allowances, and standard deduction. Now, with the Tax Cuts and Job Act, they just basically said, let's make it easier. Let's get away, redo or not do the allowances, and we'll double up the standard deduction. I foresee that continuing. The child tax credit. So child tax credit used to be $1,000. Tax Cuts and Job Act doubled it. I foresee that possibly going up as well. So things like that changes. But the big change that to be aware of is that some of your deductions and some of your credits are going to change. I don't think it's going to drastically change your W-4, but one of my best practices for payroll is to reach out to your employees about that W-4. So you're required to get a new W-4 from an employee by February 15th if they have zero withholdings. But I say take it another level and say, communicate with your employees and say, do you need to update your W-4 based on what happened with your tax return? Do you need more withholdings or less? That definitely needs to be communicated when we go from 25 to 26, just because there are going to be more changes than just our income thresholds changing with our tax rates schedule.
You know, I've only worked one place where the employer, and I really appreciated it, where the employer took the proactive position of helping employees with, filling out their W-2s for preparation of what's going to happen at their end of the year with their taxes. And that was so helpful. Instead of being the traditional HR response, which is, oh, well, I really can't tell you how to do that, or that's not for me to say. You're going to have to go see your tax advisor, and you're talking to, someone that isn't going to have a tax advisor, and they're just trying to figure out their taxes at home. And they're like, look, I had to pay taxes. I don't want to pay $2,000 at the end of the year. How do I make that adjustment? That might seem really simple for many people, but it's not an easy understanding of how to adjust their taxes appropriately or their W-2 appropriately so that they can, maybe be more balanced at the end of the year. But what you're saying is the brackets are changing and we're reverting. Is that what you're saying?
The brackets always change. There's always adjustments for inflation every year. The Tax Cut Job Act reduced the top bracket to 37%.
It's going back to
from 39.6%. It does revert back if it's not extended, but given the makeup of our current Congress, I would assume we would keep it at 37%. I don't foresee that changing. The bigger change, I think, is possibly some stuff on the Schedule A. So in the past, if you've done standard deduction, you might revert back to doing itemized deductions, getting more deductions, and also looking at those credits that you might be eligible for, changes in the credits. So that might impact. But yeah, there's always a possibility that we revert back to a higher tax rate.
All right, very good. Anything else on the federal payroll updates that you want to share with us that you might be talking about?
I mean, there's some more hot topics, but back to the whole idea of the W-4 and communicating with your employees. I know the gig economy is a big thing. We talked about it last year. It's still a payroll hot topic. And I actually just had a conversation with a student. She didn't realize that you can have more withheld. She's got her main job, and then she's getting a side hustle, which I highly recommend everybody have a side hustle. And I said, you can just have more withheld from your main job to avoid those estimated payments. So, and she had no idea. So that's, again, to your point, helping out your employees and saying, hey,
Yeah.
because otherwise I said, if you don't have enough taxes withheld from your side gig, your employers are going to get a letter that says, hey, make sure that they're withholding at the maximum amount.
Yeah.
So
that can affect what the employer has to do. Exactly right.
Exactly.
Yeah. Amanda, talk about AI. Are you seeing any developments with AI and the payroll and fringe tax benefit platforms or approaches?
Well, I know, especially as a professor, originally it was like, ooh, AI is bad, stay away. And it's just, unfortunately, you're going to have to embrace it. It's not bad. It just needs to be utilized as a tool. It shouldn't be dependent upon, but I think it's a great tool to use, and it's getting better and better as it continues to develop. I would recommend using it for your policies and your procedures, helping you write those. But as far as the other, more importantly, is utilizing your software, making sure that we streamline payroll process. Gone are the days where you and the payroll department should be inputting the data. You need to give that to somebody else, predominantly a software system to do that, because I think every industry nowadays is hurting for physical bodies. I'm not sure what everybody's doing. I think they're all blogging, or they're on something.
They're all got that side hustle you were saying.
Yes, exactly.
There you go.
I don't know. Anyway, I know we're all hurting for workers these days. So because of that, gone are the days of somebody actually putting in the information. That needs to be done by a software. And you, as a payroll processing department, as an HR department, need to be reviewing. And also just adding to what Bert was saying about how we have all these laws changing federally, and then it gets pushed down. The states might have something different than what the federal tells you. Just to be aware of it, you need to be more of that review process. So that's what so I don't know if it's more necessarily AI. I would say more of the automation of the payroll system.
Amanda, I like to think of all of these changes as making sure that people like you, me, Phil, and probably all of our listeners who are mainly in the HR realm, that we all have jobs into the future. All of these changes are job security for us.
Yeah. Well, I don't know if you've been paying attention to what's going on with the accounting industry, but it's a great time to get your accounting degree, by the way. You will have your pick of wherever you want to work. So, but yeah, you're right. Sure. Gainfully employed for sure.
Amanda, one of our listeners online, Deborah, is asking really about the, I think it's the 2.0, and does that apply to plans started prior to 2022? And I think the answer in there is some elements probably do apply to before those plans that were implemented before 2022, and some will only apply to those plans implemented in 2022.
Exactly. It depends. It's also my favorite answer to things too. That's the school business answer. It depends. It depends on what provisions you're looking at, which ones are applicable. Like, for example, the catch-up contributions from 60 to 63, that doesn't matter when you started your plan, but other provisions would be depending upon when the plan starts. Last year we did include in the booklet in our the actual handout summary of the law.
Yep.
So
So Deborah, we'll see you if you get online, Deborah, on the AIM website. You can join in. We have a program available in person. Amanda does a great job and spends a day in person or the morning in person with the group, or you can attend online, whatever works best for you. One of our other listeners here, Amanda, Dave, is asking now, you got to understand a little bit about Dave. I know Dave very well, and Dave's always looking for the easy way. And that didn't mean that Dave's lazy. He's a very smart guy, but he's always looking for the easy way. Sometimes I like to call him Easy Dave. But Dave is asking, is there a particular W-4 guide you would suggest or recommend? Is there such a thing?
So there is a W-4 online portal. So
Okay.
what I would do, again, I get it. You don't want to hold hands too much, because if you do too much for your people, then they start to expect that. But you could just send out a standard email that says, I would say April 10th, right? Not January 1, but after they probably process their tax return is when I would say, hey, just FYI, guys, just a reminder, you might want to update your W-4. Here is the IRS website. If you go into the irs.gov website, they have the automatic W-4 that asks you the questions that you can complete and fill out. So that's what I would use in the past, because it looks completely different than what we are used to with the old W-4.
All right. Fantastic. All right. Well, thank you, Amanda, for joining us this morning. Again, on that payroll tax update, we have looks like December 3rd is our in-person program in Peoria, Illinois. That's where it started 38 years ago. And due to the demand across all of the states that we serve, we also offer the live online version, which will be simulcast from our office here in St. Louis. And that's on December 13th. So we will see you again on December 3rd up in the beautiful city of Peoria, Illinois. And thanks very much. Until then, we will be back here next week at 7:30. And why don't you go out and be good to somebody? Take care. Bye-bye.
Thank you once again for tuning in to This Week at Work. If you enjoy the show, please share it with your colleagues, forward our invites, share the link, aimea.org/This Week at Work, or follow or subscribe wherever you get your news and entertainment. LinkedIn, YouTube, Spotify, Apple Podcasts, we're everywhere you are. Don't forget you can be part of the show. Send your questions and comments anytime to info@thisweek.work. We'll see you next week, 7:30 a.m. Central Time, when we discuss what's happening this week at work.